Hello and welcome to Switzer Investing Insights, brought to you by NabTrade. Over many years, we've given you some insights around how to run a self-managed super fund, but today I thought we'd put Peter Switzer under the microscope and see how he's running his fund.
Yeah,
Peter,
good idea.
How long have you had a self-managed super fund, and how many members have you got?
Yeah, so we basically were started in the early 2000s, and there was when both our sons came into the business, and we thought it was a good idea to, and self-managed super funds were becoming much more popular then, so we created one then. We're all in accumulation mode, and it's been a good experience.
So you've got 4 members.
Yep, 4 members.
And do you have an investment strategy?
Oh, well, that's critically important. And the interesting thing is our investment strategy has been, I guess, predetermined by the fact that we had younger people in the super fund. And then when we started, we were younger as well. So we had very much a growth-oriented investment strategy.
So how does that translate into assets and your allocation to different asset classes?
Yeah, and believe it or not, despite people thinking I may well have aged since those times, we still actually have a growth strategy. And the reason, for just 2 reasons. One is, I'm not planning on retiring anytime soon. I figure I've got a long time to live. I often say to people, you can't go too conservative too early. Our sons clearly are in the growth phase, so we're still in the growth phase. So we are pretty well 100% exposed to the stock market. My cash balances go up and down depending on whether I think this is a good time to sell a particular stock, but I'm not a big seller of stocks. I tend to buy good quality stocks when they are at low prices, and I hold them for the medium to long term. And
how does you sort of manage the dilemma between superannuation and investments outside super?
Well, I've got quite a lot of investments outside super. I was for many years very long property, and it's been a really, once again, we would buy property assets when prices were low. One of my most recent purchases was right in the depths of the GFC when people were tipping Great Depressions or whatever. We bought a property in the country, which has proved to be a very good investment. So we have investments outside of super, and I've got to say, my super investment is not the mainstay of our wealth going into retirement. It's going to be an important adjunct to the other investments we have, including our business, which is something which is an investment as well.
So typically property outside super, equities inside super.
Yeah.
What about Australian equities versus international equities?
Yeah, this is an area where I probably not follow my own advice as well. I know a lot of our clients and a lot of the people we've talked to on NabTrade, we will always suggest that they should have a bigger exposure, particularly to the US, and our advice has been absolutely right. I've tended to buy and sell international exposure depending on where I thought the market was. So at the moment, I'm really keen to buy international exposure. Not sure if I'm going to move straight away, but I'm getting close to it because I think, like for example, Chinese tech stocks have been sold off. Companies like Facebook have been crashed, and I think these stocks will come back over time. So I'm getting ready for that kind of thing. But historically, I think I should have had a greater exposure to US market in particular.
Okay. What's your process for selecting investments?
Always go for quality companies that pay dividends, because I know dividends are critically important to overall long-run returns. Quality companies paying dividends when the market beats them up. So, for example, when CSL was beaten up lately, I never held CSL, but I thought I couldn't resist it this time because the share price went down. But most of the companies are dividend payers, bought at the right time. I'm a bit of a contrarian investor, but always good quality companies.
Okay. What's been your best investment and also the worst?
My best investment without it was Macquarie. Macquarie, well, it was called Macquarie Bank then, but it's Macquarie Group nowadays. And that was during the GFC. I was holding at a price of about $40 going into the GFC. When it got to around 23, I went long pretty hard. Then, as I said, I was telling people I didn't think it was going to be a Great Depression, so there would be a rebound in the stock market. Got a little bit worried when it got as low as $16, but thankfully...
People were talking about a breakup.
That's right. And Jimmy Chamos in America was really... He'd been talking Macquarie for a long time, but fortunately... Treasurer Wayne Swan supported all the banks and the share price kept coming back. Nicholas Moore has put a much better investment strategy in place, and Macquarie has proved to be my best investment.
Paid a good dividend, now about $115 roughly.
Yeah, exactly right.
Okay, and your worst investment?
Worst investment, there's been 2. One was accidentally the worst investment. It was a triple Q product. In those days, you could only buy it through one stockbroker in Australia. I think it was, I can't remember the name of the company, but it was the only company that could do it. And I bought that because Triple Q gave you access to the NASDAQ. And remember, the NASDAQ would have been belted up after the dot-com bust, and I thought it was so high and so low, the NASDAQ, it was a good time to buy that index. Now, I was absolutely right, but every time it went up, the Aussie dollar went up. So I kind of cancelled out my gains. And just when the Aussie dollar started to fall, this brokerage lost the right to sell the Triple Q, and I was forced to sell it. I hated that investment. But the other worst investment was holding BHP and Rio at too high share prices going into the GFC. No, well, they actually did okay during the GFC. It was when the mining boom went off the boil. And so I decided to take my losses. But I did wait until BHP and Rio got to around the $15 mark, Rio around 40, and I bought back in. So it ended up being a pretty good investment in the end.
Okay, in regards to sort of using outside assistance, what use do you make of administrators or accountants or other people to help?
Look, if I was retired, I wouldn't use anyone else but an auditor, which you would need. Now, I'd use computer software programs and great websites like NabTrade for information and whatever. But because I'm so busy, I do use an accountant who makes sure that the returns are put in properly, and he then takes it to an auditor. But that's about the only service. The rest of it I do on my own financial advice because I'm a financial advisor, and I can pick my stocks and purchase them on great websites like NabTrade.
Okay, so thinking about your role as a trustee, and you've been running a fund for almost 2 decades.
Yeah.
Any sort of advice to other trustees, some do's and don'ts?
Yeah, I think you have to have an investment strategy that is closely linked to the goals of the trustees, first of all. Do lots of homework when you decide to do an investment. And I think people watching this are the sort of people who do that. And I think also be a contrarian on quality companies when they're being belted up. I think that's a really sensible strategy. Work on having a good dividend return over time, and when you make good money in the great periods of time, siphon that money off, put it into like a slush account for those bad times where, in case your dividends just don't deliver as much as you want, you can take the money out of the slush fund.
Any things you shouldn't do?
Yeah, look, I would avoid not being diversified, even though I should be more. But by the way,
so you regret not being more diversified?
Exactly, and at the moment I'm going to progressively go into some exposure to bonds and some alternative products to the stock market. I'm going to do that as I think we're getting closer and closer to the top of this market. I would have I would definitely have few stocks, at least 15 to 20. I know our Switzer Dividend Growth Fund has 60 or 70, but a fund manager can do that better than we can. And I think the final one is don't overreact. The people who sold out of the stock market when they lost in the GFC and went to term deposits, they really regretted it when they saw that market of ours rebound really strongly in 2009. So I think overreacting and changing your investment strategy during tough times is something to avoid.
Yeah, I mean, super's a long-term asset. You've got to stick with a long-term and stick with a long-term strategy. And I think that's a really good way to conclude those remarks. So Peter Switzer, thanks for joining us on this edition of Switzer Investing Insights, brought to you by NabTrade.